Good morning, everyone, and thank you for choosing today's market analysis. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, October 10, 2023. U.S. futures are in the green this morning, with the S&P 500 and Nasdaq 100 both up about 0.2%. Chinese stocks listed in the U.S., including Alibaba and JD.com, are climbing on a Bloomberg report that China is prepping new economic stimulus measures. Corporate earnings are also providing a boost, as PepsiCo raised guidance and Coca-Cola posted gains. However, mobile chipmakers like Skyworks and Qorvo are declining after analyst downgrades. In bond markets, Treasury yields are plunging as markets play catch-up from Monday's global fixed income rally. The policy-sensitive 2-year yield saw its biggest single-day drop since late August. The benchmark 10-year yield also posted its best day since March. The moves come after Fed officials struck a more dovish tone on Monday, damping last week's speculation about additional near-term rate hikes. Vice Chair Philip Jefferson indicated the Fed could proceed carefully following the recent surge in long-term yields. Dallas Fed President Lori Logan also said the yield spike may reduce the need for further tightening. Markets are watching for more guidance from additional Fed speakers today. The shift in rate hike expectations provides a clear risk-on boost to equities, according to analysts. In Europe, the Stoxx 600 jumped 1.6% for its largest daily percentage gain this year so far. Mining stocks led the rally, with copper and nickel prices rising on hopes that Chinese stimulus can spur metals demand. Anglo American, Glencore, Rio Tinto and ArcelorMittal all posted gains over 3%. The auto sector also jumped the most in 4 months, with Volvo surging over 6% at one point. Experts say potential stimulus tailored toward China's tech industry could catalyze a broader recovery. Global mining stocks remain depressed compared to world equities, but more definitive Chinese policy action could signal a change in sentiment. Geopolitical tensions continue threatening the upbeat market mood, however. Israel is building up military forces around Gaza as deadly airstrikes escalate. Iran's potential role in the conflict raises concerns. This instability, alongside moderating global growth, presents an uncertain backdrop even as stocks mount a rebound. Some analysts have expressed surprise at the speed and magnitude of the risk asset recovery. While markets are benefiting from dovish Fed pivots, the Middle East tensions warrant close monitoring according to experts. Further Fed commentary today may also sway sentiment if officials strike a more aggressive tone. Summarizing, stocks are rising globally on China's stimulus expectations and falling U.S. Treasury yields following last week's hawkish Fed-driven sell-off. The dollar is steady after initially weakening. Geopolitical instability persists but has yet to halt improving risk appetite. Corporate earnings and guidance are mixed but providing catalysts. Looking ahead, pay attention to any emerging details on China's stimulus plans, escalation or de-escalation in the Middle East crisis, and guidance from Fed speakers. The interplay of these forces will continue directing markets. We'll keep our eye on the ball and bring you continuous coverage of events driving trading. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Greetings, viewers. In today's International Finance News Roundup, we'll cover the latest on Bitcoin's market dominance, BITSTAMP's talks with European banks, Sam Bankman-Fried's legal probe into Alameda loan involvement, options traders calm amid geopolitical tensions, and more. First up, Bitcoin's share of the total cryptocurrency market cap, known as its dominance rate, has climbed to 51.2%, its highest level in 3 months. This measure peaked in late June at 52%, indicating Bitcoin has strengthened its lead over other cryptos like Ethereum. According to analysis, Ethereum's price has underperformed Bitcoin's impressive 66% year-to-date gain. Ethereum is up just 32% so far this year. Experts attribute this divergence to Ethereum's greater expansion of supply from mining rewards and fewer transactions burning supply. In other news, BITSTAMP, one of the longest-running crypto exchanges globally, has revealed it's in talks to assist 3 major European banks with launching cryptocurrency services as soon as Q1 2023. This suggests the EU's upcoming crypto regulations are smoothing the path for traditional finance to embrace digital assets. It's a major contrast to the US, where crackdowns are hindering banking adoption and prompting crypto firms to consider relocating. Meanwhile, legal counsel for Sam Bankman-Fried is seeking to question FTX co-founder Gary Wang about his role in dubious loans from hedge fund Alameda Research. Documents filed last night aim to probe Wang's reliance on legal advice when securing $200 to $300 million in loans from Alameda, which he used for investments and real estate purchases. Prosecutors have already investigated these transactions, which are central to fraud charges against Bankman-Fried as his trial continues. Shifting focus to options markets, Bitcoin and Ethereum traders seem unfazed by rising geopolitical tensions that could further destabilize the precarious global economy. Analysis of order flow on Deribit shows a distinct preference for selling options rather than buying. This signals an expectation of continued low volatility and steady prices in the near term. With crisis risks mounting from multiple fronts, crypto options traders are displaying remarkable calm and restraint so far. Zooming out, market probabilities for the Fed's benchmark interest rate path reveal drastically tapered rate hike expectations. The futures market now sees just a 10% chance of a 25 basis point hike to the 5.5 to 5.75% range at any point in the near future. Comments from Fed officials on Monday indicated rising long-term bond yields may deter further hikes. This marks a dramatic shift from last year's aggressive tightening cycle. To recap, Bitcoin is consolidating its crypto market dominance while Ethereum lags. Traditional European banks appear poised to embrace crypto assets thanks to upcoming EU regulations. Legal scrutiny of suspicious Alameda loans to FTX execs continues. Options traders are betting on stability despite growing global instability. And the Fed has firmly moved to a dovish stance on rate hikes. In conclusion, we'd like to thank you for watching today's market analysis. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.